Hey, welcome to this week's market report. We are going to talk today about not only the market stats of what's happened in the last 7 days here in Northern Virginia, but we're also going to talk about the 4 letters that you need to know the difference between coming from a lender, both as a buyer and a seller. My name is Sean Price. I am with the Price and Price Group here at eXp Realty, and as you can see, I am here alone. Kelly is not with me. She is actually quarantining. She tested positive for COVID a few days ago, and you can also see that it is nighttime outside. I have waited as late as possible to shoot this market report, hoping that we would be able to get her down, but the quarantine time just isn't working out. So we're gonna go ahead and shoot this market report this week with just me alone. She will be back for next week's report. Also talking about the lender letters, these were more her area of expertise because she is a lender, but I can tell you about this from the buyer and seller side. So the 4 different types of letter. Actually, first of all, if you want to get directly into the details and the weeds of the numbers of the market, go ahead and fast forward to the end of this video. You'll see the graphs on the screen, and that's where I'll go into the details about what's going on. The general mood of the market is it is very, very chaotic. We are scheduling, we're trying to schedule showings as close to the day of showing as possible, because what we're finding is when we schedule showings 3 and 4 days in advance, by the time we get to the date of the showing, they are already under contract. And we've had that happen multiple times this week. So we are back we're getting into the spring. Luckily, we had a little influx of inventory, but there's a lot of buyer activity out there right now. So that's the general mood of the market. It is kind of chaotic. It's kind of back to what it was spring and summer last year. One thing that I have noticed, and this will probably end up changing as we get more intensity as we approach spring, but even with the multiple offers, the properties aren't going as high above ask. For example, we had a property that was priced at $675, had 15 offers. The final offer was only a little bit over $700. So there's a lot of contracts right now that we don't know the final close price that are out in the market, and we may find that they are actually escalating to those higher numbers. But the ones that I am aware of, the ones that we've seen, the ones that we know the offer prices on, they're escalating, but they're not escalating to the level they were before. So that's good news for buyers right now. Okay, so the different types of letters that we need from a lender. So the first thing, there are 4 different ones. There's the pre-qualification, there's the pre-approval, there's the loan estimate, and there's the clear to close. Okay, conditional approval, and then there's a clear to close, which is the 5th. Okay, so the first one, the pre-qualification. I haven't seen one of these in quite some time, but I actually had a buyer that came to me with a pre-qualification. Actually, 2 buyers this week that came with pre-qualifications. And basically what a pre-qualification is when a buyer calls a lender and the lender asks them questions, and the buyer will say, I make this much money, I have about this much in debt, these are my monthly expenses, and so on. And then based on what the buyer tells the lender will kick out a pre-qualification letter that basically says, based on what you said, this is what you would qualify for. So a pre-qualification does not carry any weight in this market. And the reason for that is because there's no confirmation of what the buyer is sharing. Now, the letters can look very similar. The pre-qualification letter is what I just described. A pre-approval letter is where the lender actually looks at documents. They actually see tax returns. They actually see W-2s if it's an employee. They actually see the debts. They see the different things that they need to prove what the lender is saying. So that's a pre-approval letter. The challenge is that when a buyer presents an offer and they have a pre-approval letter from a lender, those 2 letters can look very much the same. A lot of lenders use pre-qualification and pre-approval as interchangeable words. Also, some lenders don't even do pre-qualifications, but they call their pre-approval a pre-qualification. So it's really, there's not a clear-cut rule and definition when it comes to these 2 letters. So from the buyer's perspective, you need to know what it is that you have. Your agent needs to sit down and speak with your lender, or at least be able to look at this document and know that it has been at least desktop underwritten, that a human has seen the documents that are required to prove these things that have happened. Because when you submit an offer, Then the listing agent for the seller, okay, now this is where the seller side comes in. Sellers, your agent needs to know the difference between these letters. Your agent needs to do their due diligence on every offer that comes in, because you may get an offer that is significantly higher than your asking price with all the best terms, with everything is fantastic, but there's only a pre-qualification letter. And once you start getting into it, you've taken the property off the market and you start getting into the process, then that buyer can't qualify for a loan as soon as they start asking for documents, and you're 2 weeks, 3 weeks into this process, and the buyer voids the contract, and you're right back to where you started, and you've lost 3 weeks on the market, and you have a history of going off the market and then coming back on the market, which raises questions in the buyer's mind of, was there something wrong with the inspection, so on and so forth. So from a seller's perspective, it's really important to qualify every lender, every pre-approval letter that you get. And from the buyer's perspective, you need to understand that it is very important for the seller to qualify these lenders. So you need to make sure you have a strong pre-approval letter. The lenders that we work with, they all do very strong pre-approvals. They're also very quick. You can get this done in a matter of a couple hours. They are very, very efficient with that. So if you need some referrals for some lenders for these documents, that's great. So now we have a pre-approval letter. The pre-approval letter is given to the submitted with your offer to the seller. So you need to get a pre-approval letter before you go out and start looking at properties for a couple of reasons. Number one, when you find that property, you want to be able to submit this letter with your offer, and you have to have that done. The other reason is you don't want to be looking at properties that you can't qualify for, because what will happen is you go in, you fall in love with this home, you decide you want this home, and then you find out you can't qualify and you're heartbroken. So you want to get that pre-approval letter so that you know what you can qualify for, okay? So it's pre-qualification versus pre-approval. Pre-approval is what we want. Pre-qualification really carries no weight, okay? That's the classification. They could be labeled interchangeably, so your agent needs to really communicate with the lender to find out what you have in your hand. Now, next comes what's called a loan estimate. The loan estimate only can be issued after you have a ratified contract. And what the loan estimate does is the loan estimate is your opportunity to lock in an interest rate. It's where all of the terms are disclosed. So for example, you may go to one lender and they say, I can get you 6.75%, let's say. And you go to another lender and they say, I can get you 6%. And they give you a pre-approval and everything, right? Then you get down to the time for the loan estimate where all the terms are actually disclosed, and the 6.75% lender was not charging you any points. It was a legitimate, 6.75, so on and so forth. The 6% lender was charging you $50,000 in points to get you to 6%. So you don't know that until you get to the loan estimate. And a lot of buyers will make the mistake of trying to shop their loans around and try to get lenders competing against each other with a pre-approval letter. And you can't really do that. You can have a preliminary discussion, but it's really only a preliminary discussion, because until you get that loan estimate, you don't know all the terms of what's being done. This is especially true with new builds. This is especially true with 2-1 buy downs, different lending programs. You really have to get that loan estimate so you can compare apples to apples. Once you get those loan estimates, and you can get loan estimates from multiple lenders. Once you get those loan estimates, then you look over those documents and you figure out, okay, what terms work best for me? I might be getting a lower interest rate, but I'm having to pay a certain amount of points. Does that work for me? What are my plans with how long do I want to hold this property? Am I going to get a return on this investment? So on and so forth. The lending programs, those are all different. So all of this is clarified in the loan estimate. If you don't know how to read a loan estimate, you need to have somebody that can read that for you. Not to self-boast here, but that's one of our strengths between Kelly and I, because she is a licensed lender, but she does not practice. She knows how to read these documents. She can explain to you what every line item on this document means, so you have a full understanding of what you're getting into, and as you're comparing them, you know what you're comparing. Okay, so that's your loan estimate. So you have your pre-qualification, which means nothing, pre-approval, which gets you into the contract, loan estimate, which gets you a commitment to the terms of the document. Then you have a conditional approval, which comes at the end of your financing contingency, in which that's when the lender has done all of the underwriting for you and all the underwriting for the property, and they've agreed that they will conditionally approve this loan, that they will fund this loan as long as certain conditions are met by settlement. That could be documents that could be the need for employment verification. Sorry, I just realized I have my Bluetooth in, so I got sidetracked. That could be the need for employment verification. There could be several different things that could mean. So, so those conditions are laid out for you. So that's the conditional approval that happens at about day 21. That's right around the time when your finance contingency ends. Some lenders are a lot quicker, but that's roundabout. And then 3 days before settlement, you get what's called a clear to close letter or a closing disclosure from your lender. And that is the final document that shows you everything that's going to happen with that loan. It is the final disclosure of all your interest rates, closing costs, and so on. You sign that document and you get to closing, okay? So you have a pre-qualification, which means nothing. You have a pre-approval letter, which gets you into the contract. You have a loan estimate, which happens after ratification and locks you into your rate. Then you have a conditional approval letter, which is the document that's required to satisfy your finance contingency. And then last but not least, you have your clear to close. Okay, so I said 4 documents at the very beginning. I wasn't planning on talking about clear to close, but there are 5 documents you need from your lender. So that's what those documents all mean. All right, I hope that makes sense. So I hope this is a good resource for you. You can kind of come back and go through this again when the time comes and you're going through your documents. Also, if you have any questions, please feel free to reach out to Kelly and I. Even if you aren't clients of ours, we're happy to help you out with that. Okay, so back to the market report. The last 7 days have been kind of crazy. We have seen a lot of multiple offers. We've seen properties flying off the market again. We've seen properties that have been sitting on the market for quite some time that have gone off the market. I've even seen some properties that were overpriced get the asking price. Now, whether or not that goes to closing, you know, if the debt buyer is actually pre-approved appropriately and so on, we shall see. But I've seen other sellers that have gotten, I saw one seller, the value of their home, the appraised value of that home is going to be around 189, and they got 220, and it was one offer. Blew my mind that the buyer offered that without any competition. So we're seeing some crazy stuff out there in the market again. So that's what you need to be prepared for. If you're a seller, if you're waiting for spring, don't get in the market now. Let us come by and talk to you. Look at your house, see what we can do to get your home sold for the maximum amount of money possible in really the shortest amount of time with the least amount of hassle. Buyers, you've got to be prepared. You've got to have an agent that knows how to analyze the market, that knows how to be strategic with their offers, and can get you your offer accepted without potentially overpaying way too much money, okay? All right, so that's the status of the market. Let's go in and look at the numbers. Okay. As always, let me see if yes, I have my pen. Hopefully it will write. As always, buyer activity is the orange line and inventory is the blue line. So you can see buyer activity has just been continually increasing. All right, we had a decrease in inventory here, but then we had a sharp increase in inventory in the last 7 days. So buyer activity increased just a little bit in the last 7 days, but this is important. So that buyer activity increased that little bit in the last 7 days, but that was in response to this drop, okay? Even though this inventory dropped, buyer activity still increased, which that's that window where we saw a lot of these properties that have been sitting for a long time getting put under contract. Then inventory shot up. So I'm expecting to see buyer activity in the next report to go up significantly. Inventory, it's hard telling if that'll come down or go up. We are getting closer to spring, so it may continue an upward trend, but I expect to see buyer activity go up pretty significantly. So as you can see, buyer activity from this point on has been, it's not gonna print for me, so bear with me. From this point on has been a significantly upward trend. Inventory has been, from here, it's been an upward trend, but it's had some ups and downs. It's gone down, up, okay? So that is the trend. Our market activity is increasing again. We had a significant, here's where we were, interest rates started ticking in, so we had a significant drop when interest rates started going up. Then we had kind of a flattening. It was a little bit of a decline, but a flattening in the industry. Then over the holidays, we had the normal drop, and now as we go into spring, we're heading back up. So we expect to see this continue up. Is it gonna reach this level? I don't know, we'll see what happens. Okay, so buyer's market versus seller's market. Well, when you see this graph and you see where we are right here, that's exciting because it's almost a neutral market. But the fact of the matter is it's not. So let me erase here. Sorry, I got ink happy. So you see that we're close to a neutral market. Remember, the orange line equals a neutral market. We're close to that market here, but the only reason that we came so close is because inventory shot up so much. Last week, we were here to here, so there was a huge gap between buyer and seller activity. That's why we were so high right here. But then this week, inventory jumped up to almost meet buyer activity, even though buyer activity still increased. So that's why we look neutral here. But that neutral is it's kind of misleading because we are not in a neutral market right now. We are still in that seller's market. We'll see this go back up next week. Okay, so if you have any questions about this, please feel free to let me know. It's getting competitive out there, so be prepared. Have your agent be ready, be willing, be able, and know how to negotiate for you and know how to get you the best possible terms on your property, both from the buyer side and the seller side, because there's a lot of activity starting to happen. It's a great time to buy. Again, buyers aren't paying too high. There are some properties that are still there. We actually got a property under contract this week for one of our buyers for $10,000 under the asking price. So it can still happen, but you have to know what you're doing and you have to know what you're looking for. And that was a multiple offer situation. Okay, I hope this helps. Please let us know if we can do anything for you. Reach out to us. Please do me a favor, like, subscribe to this channel so we can get this report out to more and more people. All right, everybody have a great day, and we'll see you next week.